Welcome back and joining us for a further look on what's playing itself out in the market scene is Seleho Tsatsi from Anchor Capital. Seleho, always a pleasure and a good afternoon to you.
Pleasure to be here. Thank you.
All right, Seleho, I think all eyes are on what's happening in the U.S. With the Fed meeting commencing. We're waiting for that inflation print, but also seeing, I would say mixed numbers or mixed sentiments coming out of the U.S. Strong GDP, but cooling in some areas. I'm keen just to get your thoughts on the overall picture that we're seeing in that part of the world.
Yes, I think what we can definitely say is that equity markets, at least, particularly in the US, are tilted or priced for cuts next year. So I think to the extent that we do not get cuts out of the Fed next year, or indications that that's what's coming, we could have a bit of a nasty reaction from equity markets. Because definitely, if you look at, I wouldn't call it exuberance, but maybe the positivity that we've seen in how equity markets have performed over the last month or two, a lot of that has come from monetary policy expectations.
Would we still see equities also a little bit upbeat if the U.S. did head into a recession? Because there are some indicators of that as well. Would this leave equity players feeling a little bit more positive also about the state of the economy?
Well, I think if we did head into a U.S. recession or a global recession, the market as a whole probably wouldn't fare as well as it has done, for example, over the past year in 2023. But perhaps what we could say is that there are parts of the market that might do better than others. So you might have more defensive parts of the market, or defensive business models that might be able to hold up better in the event of a recession. So I suppose if we can't pick the market as a whole, we might be able to try pick our spots or sectors.
We'll be watching that one very, very closely. I'm keen to also speak about the rand and how that's playing itself out. We did see the rand breaching that 19 rand to the dollar mark and also pulling back slightly today. I think it's safe to say that it will just be a volatile time, Seleho. But if we do see a more dovish US Fed now, I'm keen to find out what could then happen with the rand there.
Yes, I think one of the things that we found quite interesting when we've done some work on the rand recently, and we found that as much as we like to bemoan some of our local issues, lack of growth, load shedding, etc., and those are very real. We don't want to downplay that. If you look at how all currencies have performed over the last few years against the dollar, really everything, with few exceptions, has weakened against the dollar. So what we found that quite interesting. And if you look at the rand, obviously it is an emerging market currency. It's driven by, for example, what happens to commodities, given the fact that we're a commodity exporter. I guess what we found interesting is that there are many factors just outside of our local issues that drive the currency. So I think that's something to keep in mind, even as we look at what's happening with U.S. monetary policy.
Keith's getting some company news now, maybe starting off with Jubilee and them securing that copper waste rock asset in Zambia. Of course, green assets are big on the list of demands for all sorts of miners at this point. I'm keen to get your thoughts on this development for Jubilee.
Yes, I think you hit the nail right on the head. So many mining groups, especially large diversified mining companies, are looking to increase their copper exposure. We saw the impact that Anglo American's announcement that they were going to produce less copper than they had previously guided to. That really impacted the share. The share was down 13% on Friday, I believe it was, one of its worst drops in years. And so the market really is focused on different companies' ability to produce copper. What's interesting about copper, when you look at that commodity in particular, is that, as you said, it is a green metal, or seen as a green metal. It's very important to the world's transition to a greener economy. And there is the potential, if the demand-supply outlook is as it has been estimated or forecasted, there is the potential to have really drastic deficits, which could lead to very strong copper prices by 2030, so over the next few years. So it's one of the metals that we're watching really closely.
And I must ask you then about the Nedbank and ENX deal, and a very interesting one, I think, for Nedbank. I wouldn't think that anybody's trying to make an acquisition right now, but of course, where we are, there are pockets of opportunity. It makes sense to go in, just like Nedbank has here.
Yes, I found it quite interesting as well. One of the things that caught my eye just looking at the announcement was that they thought the ability to raise capital competitively is really key in that business, and that fleet management business. And they believe Nedbank has an ability to do that better than than NX's fleet management business would be able to do on its own. So they've taken just a majority stake in that business. So that's something that I think we'll have to watch closely and see how that develops over time.
I must also ask you about what we are seeing in the e-commerce world or in social media there, with TikTok going in and acquiring that Indonesian e-commerce company. We did see an integration of social media platforms and e-commerce, but it seems to have been a bit of a more wobbly one than what we anticipated it to have been.
Yes, I think this is a bit of a side note, but it'll be very interesting when TikTok's parent company ByteDance eventually lists, because we'll get more disclosure into things like this. So the e-commerce tie-up. We have seen that ByteDance, again, TikTok's parent company, their revenue for 2023, it looks like it will be on par roughly with Meta Platforms' revenue, which is astonishing when you think of the fact that Meta or Facebook started in 2004 and TikTok hasn't been around, TikTok or ByteDance hasn't been around for that long. Meta itself is also looking to tie up or get involved in e-commerce. So I think this is a trend that we will see not just from TikTok, but from social media companies as a whole. We've seen, for example, Shopify partnering with several social media platforms. So I think this is a match made in heaven, social media with e-commerce. I think it's a natural fit.
Now, Seleho, I'm keen to get your stock pick for today. Which counter are you going with?
Sure, yes. So I've chosen Spotify for today. I think it's a company that many of us are familiar with as consumers. They're the largest music streaming company in the world. What's quite unique about Spotify is that they're competing with large, well-capitalized technology giants like Apple and Amazon and Alphabet. Despite this, they've been able to not just hold their own, but actually prosper to the point where they have about 500 million monthly active users, roughly half of which, so 235 million of which, are premium or paying subscribers. They have struggled with profitability historically, so their operating margin has been negative or close to flat. But this year it has been positive for some of the quarters, and they've recently announced that they are going to lay off about one-sixth of their employee headcount. But what's really interesting is if you look at their free cash flow over time, it's actually a cash positive business. So although on an income statement you might not think it's positive, it's actually cash positive because subscribers pay first on the first of the month and then use the service. And we think that it has a moat or competitive advantage just when you look at its user base versus others. So this is a business that we're looking to watch over time.
It certainly is a Spotify type of a season right now as we see all those raps. Seleho, thank you for your time. It's always a pleasure having you on Business Lunch. That was Seleho Tsatsi from Anchor Capital.